All right, good morning, everybody. So, job numbers today, pending home sales, Kansas City Fed. We got a full house. Apple had some news, which you would expect with the negative news that it was. They're basically keeping their production flat. You would expect the market to be down, or even with Nvidia with its earnings, that the market perhaps would be down, but we're up slightly. Kind of giving it a little bit, taking it a little bit, kind of going back and forth. Brainerd speaks today, so kind of keep your eye on that. When we come into the market watch, you can see we got a full house, 8:30, 10, 10:30, 11, 11:31. Those additional auctions are game changers, so really keep your eye on those today. There's been a significant amount of movement in the bonds and in the dollar. And we've been kind of just stalled out with the dollar yesterday. We set that high right at the open, never went back to it. It's been kind of a grind. Uh, then we had that big gap down in the bonds. The VIX is still sleepy. Looked like we were going to get a little movement out of oil, but it just stalled out again. So we got a lot of divergence, a lot of odd things going on. Kind of comes down to when what should happen doesn't. All right, so we're taking a look at the S&P here, and what we want to kind of think about is that range that we've been in for a considerable period of time. We're still in it. Nothing has changed from that point of view, but that gap that we had from Snapchat's earnings, that's been resolved now, finally. So we're above that. You still want to be able to answer the question, where is the moving average? The 9 works, the 10 works. It doesn't need to, not much to be argued over. We're above it. That is one of the catalysts if we're going to see a bullish day today, or even a bull run, a little bit of a run. We were talking about this last night in the chat room after the market had closed. We've been stabilizing, and we're starting to get these higher lows. If you use OCR style analysis, then we've been getting these higher lows, and we're looking for basically a TRB, a trendline breakover. Some of the MOTs already have this, some of the monsters of tech. So depending on which one of the monsters of tech we were looking at, we had this opportunity for an IX10 or an inside day breakout combined with a trendline breakover, and the target would be the nearest pivot. So I mean, yeah, we got the pattern here on the ES, which is 4100, but depending on if you're looking at Amazon or Tesla, they almost all have that pattern. So with all this negative news this morning, you would anticipate the market would be down, but we're still sticking with that move to the upside. Bear market rally only. This is not, the bottom hasn't been called. We're not done with the bottom. We're still going to see sell side activity, but we could easily go to 41, 42, even back to 4,300. That would just get us back up to that range that we've been working through for a while. That is in no way indicating that we're done with these lows. Just that we could see a little bit of a rally for a while based on a lot of different things. One of those things being how many weeks in a row we were down. Now, remember, it doesn't owe us anything. You can have 9 weeks in a row and then get week number 10 still being the same color. The idea behind that, simple market logic. Every time you flip a quarter, you have the chance of getting heads or tails. Granted, if you flip the quarter 20 times in a row and it's head 20 times in a row, the likelihood that the next one would be a tails seems to be higher because of how many times in a row you've had heads. But every time you flip that quarter, it's still a binary choice, heads or tails, every time. Doesn't matter what you got the last time. It only seems like it matters. So the same thing with these red candles and green candles. You may get 9 in a row and think, well, it's got to give me another one, a different one now, but it doesn't owe you anything. Take a look at the ADR right now. We are sitting at 2.8 from our close of last night. Take a 2.8% move to the upside. Puts us around 40.80. That's an ADR move up. We're already up nearly 0.75% this morning. If we can get through the job numbers, we're very likely going to keep it. If the job numbers do not satisfy, then that's a wrap, and we're just going to dump it all back down again. We're inside day breakout right now, meaning we're above yesterday's high. As we get those job numbers and the volatility comes in, we want to maintain above that level. It's basically the 4,000 level. There's no reason to pinch a couple points there, one side or the other. Hold on, let me move my stop since we've faded down a little bit. Had a trade on and managing. Okay, so we've got our ADR move to the upside. We want to focus on a couple of features, namely the volume profile. How big is the box? Where are we in relation to the box? And where's the point of control? Those are always the questions we want to ask when it comes to this. So the point of control is beyond the middle on the lower end. And the size of the box is it's relatively good size. There's a lot of volume at 40-20 area. So we got a significant level of volume resistance overhead. And then there is some volume support around 39.70-ish. There is a new point of control, or not point of control, cog line. 39.31 is a new validated cog line. Now, this isn't the forum to go in why it's validated and why it's not one of the 11s. Just from now on, when it stays on your chart from now on, right? 39.31 is a new cog line only for the ES, not SPY equivalent, not SPX equivalent, just the ES. 39.31 is a cog line. You just mark it on there and leave it on there forever and ever. Amen. It's the way cogs work. So we're outside the box. We're kind of peeking our head through the top. The expectation is when we're up at the top of the box that we go down towards the bottom of the box. That's what we expect price to do. When it does what we don't expect it to do, right? That old phrase, when markets do the opposite of what they're supposed to do. And if we continue to move to the upside, 40-20 is going to be that rough line in the sand that we're going to have to fiddle with. If we get through that, then we'll focus on looking left and managing the pivots based on this Wednesday way back here, that Wednesday, Thursday move. No, Mr. Kitty Cat, you can't lay on my hand. Get out of here. My little helper wants to participate in the morning briefing. All right, so we have an untouched point of control. That untouched point of control, 39.45. Should we make it all the way back through our own Globex and break out of the bottom and get back inside of yesterday's range, 39.45 is where the untouched point of control is at. There's every expectation that we'll see a market reaction to price. Notice how yesterday we had Tuesday's untouched point of control until we responded off of it and then moved up from there. Same thing with the untouched point of control from Monday. We didn't hit it Tuesday, but Wednesday in the intraday at the open, we hit it, responded to it. Now, it doesn't always mean we're going to deflect off of it and go the other direction, but it does always mean that you want to know where the hell it is so you don't try to go long right in front of it, or you don't try to go short right in front of it. So we've talked about our base case, which would be to sustain this bullish move. There is also just the regular anticipation of range, which would be breaking back down into our own Globex, getting inside of yesterday's price action and focusing on yesterday's highest value to yesterday's lowest value. That would be an inside day. So right now we are inside day breakout. If that inside day breakout fails and we go back into the trading session of yesterday, the Globex low is going to be the pivot we want to focus on. Should we get past that, then we'll focus on the Globex high of yesterday, right? There's these different ones to mess with. Yesterday's Globex high, today's Globex low, the IB of today, initial balance, which started at 6 Globex time and ended at 7 Globex time. If we get through all of those pivots, then we'll start challenging pivots like the open of yesterday, the RTH open, the Globex open of yesterday, and then yesterday's lowest value. All of those would be pivots to the downside. If we get through 39.13 and move beyond that, then we'll focus on Tuesday's price action. It's Globex low and the low of that session. Consider those signposts all the way down. Now for the upside move, once we're in the clear like this, where there's nothing over our head, we really have to try to focus on our own current price action, right? Using something like the quant tool and just measuring the range gives us a target 40.16, 40.35. And just like we had talked about with the ADR, this is well within our range, right? So you want to focus more on maintaining this move if we're going to continue to push to the upside. It should be good, clear, clean, consistent trend. We don't want to see big, massive blowout candles, right? All right, so that gap that we were talking about for Snap, when it comes to the Nasdaq, it's unresolved still. We have not gone back up and closed that gap in this market. So that's still something that needs to be done. We are also still inside day. We're sitting inside of yesterday's price action. So when the numbers come out this morning, we need to maintain this bullish posture and break through yesterday's high and then get this gap resolved. There's very likely a lot of liquidity sitting at the top of that gap, right? 12.050 or 12.060, right around in there. Probably a lot of liquidity. So first touch play, we get there, we're very likely going to reject at least once. Should things turn negative, we'll look to get through the lower end of that gap. We'll deal with our own Globex low, and then we will focus on yesterday's values like the RTH low of yesterday, the open of yesterday, which is they're so close together, they barely even distinguish as something different. The Globex open from yesterday, all of those would be pivots to the downside. For a continuation of this move to the upside, if we do happen to get through that gap close, it'll be the same thing with the ES. We'll have to focus on our own intraday price action using either the quant tool, or if you're good at using a dynamic fib, then something like that. When it comes to trading gaps, there's a difference between gaps with futures and gaps with equities and gaps from earnings and gaps from news. So obviously Nasdaq didn't have earnings and it has a gap because another product had earnings. How many companies do you think bought at the top here? And we know that somebody did. We know that some institution or firm or somebody bought at the top there, or there wouldn't be transaction, right? There was some volume at that location. So how many people bought the top right before the earnings came out and they got dumped? And we're talking about an institution who can hold it, of course. Where do you think those people are at? Are they still there? Now, you don't have to guess or assume or think you know that there's liquidity there. All you have to do is look at the dome when we get back up there. You know what the dome looks like, right? It's that active trader. It's that dome. Ata. You see those numbers? So when we get back up into that area, 12060, you should see very large numbers on the dome on the ask. So we know that there's a lot of liquidity there because I've studied gaps and I trade constantly, daily, all the time. What you're going to want to do so that you know that there's liquidity there is look for it on the dome. Find it. Prove to yourself that it is there. Seek it out as we move into that area, if we happen to move into that area. Now, assumptions are made. I'm I'm making an assumption that there is liquidity there. But the good thing is I don't have to trade it without proof. As we come into that area, I can look on the dome and see if it is really there or not. But until we get there, I'm just going to assume that there is liquidity there. Keep your eye on the bonds. This double bottom is a precursor for something to get a lot worse. I know we don't often come over here and look at this, but as the discussion in the chat room has been indicating in the last few days, if you're finding the current market hard to trade, keep in mind that the current market is like 90% correlated. So everything that SPY does, everything else is doing. If SPY is range bound today, so is everything else. If SPY falls today, so does everything else. Well, that doesn't leave very much open on the equity side of things to trade. But there's more than just equities out there. You can trade bonds, you can trade the dollar, precious metals, oil, pot. The marijuana stocks often separate themselves from everything else. There's the energy market, real estate. When it comes to just what can we trade besides the same old tech stuff, there's plenty of things out there. So think about commodities or precious metals or oil, something that is not highly correlated to the S&P. So when we say 8 out of 10 stocks are doing exactly what SPY is doing, you got to kind of ask yourself, what are the other two stocks? Right? If 8 out of 10 are doing what SPY is doing, what are those other two stocks? What sector do they belong to? What industry do they belong to? Is that a place where I can find a trade opportunity? Otherwise, if it's a range day in SPY, it's going to be a range day in everything else, right? So when we think about the bonds, they're an opportunity to trade, but they're also something that we want to use for an indication of what's going on in our marketplace. What is our expectation if the bonds break this critical low and drop below the 140 area? At what speed, too? Is it going to be like this, where it's just a mad run in a single direction? Of course, we would be talking about a downside move like a bidless beast. Or is it actually going to hold this double bottom and begin moving back up? And in that move up, is it going to be done with the same kind of impulse play like this, or good, stable, normal price action? How it moves through the day is critically important to how the S&P and the Nasdaq are going to move through the day. The financials the other day was the only thing holding up the S&P. Keep your eye on the financials. They've been a really great indicator, right? Just like other people load an RSI or a MACD or a stochastics, you can load another product, another sector, another industry, and use that as your indicator. Keep a close eye on the financials. Should these go, so will the S&P, right? What would move the financials? A big move in the bonds, a big move in the dollar. Now, don't assume that it's an inverse correlated state. Most of the time, when bonds go down, stocks go up. But that doesn't mean that it has to, right? It's not a teeter totter. They're not directly inversely correlated. So we don't have to see one fall and the other one rise. They can both move in the same direction. All right, so looking at what's up this morning, remember we want to find those TRBs, all those trend line breakovers on the monsters of tech. For an example, Tesla. Tesla did not get the breakout yesterday, but it is right up against the trend line and it managed an outside day, right? It got outside of yesterday's price action. So what do we want to see in Tesla today in the pre-market? We want to see that it's gapped up, check. That it's higher than the previous day's high, yes. So as we come into the open, we don't want it to fall down below yesterday's high. If it does, try to find the midpoint in the Globex. So all of that gray area from whatever its highest point happens to be to the lowest point of that, you don't want to see it fall below that area. And if you notice, it lines up pretty close to the Globex from Tuesday. So as we come into the open, of course, by then we'll have our job numbers. We're probably going to have a lot of volatility. If Tesla maintains at least the midpoint of its Globex, look for that rally back out above yesterday's high, and that'll be your TRB breakout with an inside day breakout attached to it. The target would be first target would be $700 in Tesla to the upside if we can maintain that breakout of yesterday's price. Now Microsoft is the odd one out. It's gapped down. It's in this bear pennant or bear flag. So first it's got to break that and then have the move to the upside just to get to the TRB. Now I've traded this multiple times in the last few years, and it's better to be completely gapped out by the open. If we open and rally out, that's fine. It's okay, but it works better if you open already outside of the range. So with that range in mind, you can see when we get into the intraday, we are already above that line, but it needs to stick, right? We still got the job numbers coming in, and we failed to get through yesterday's high. So that's one of the things that we want to see. We want to see that we open above yesterday's high. If we don't, you can use that quant tool and check your Globex, kind of focus on that, and or lean in on if we get into the open, we see price start to fade. It needs to hold above yesterday's open, and we want to see it break out of yesterday's price. So this would be an inside day breakout, which also breaks it out of this wedge formation and gets us that run to the upside. 270 is the first target today. That would get us up to the TRB, right? It's that trend line breakout, which I don't think it's actually going to manage the full breakout today, but I think it can make it to that line today. All right, so we're looking at Apple. It already has the trend line breakover, but only by default, right? It's not like it actually did anything yesterday. It's still inside day. So now we've got an IX10 pattern with an inside day and a TRB breakout. So we want to see this thing rally in the pre-market, at least as high as where it closed yesterday, and better at higher than yesterday's high, right? 141.79. But look at where we're at. Apple has bad news. Apple has said something about they're going to keep their production numbers flat. That's going to continue to weigh down on this thing. So no TRB breakover for Apple. And besides that, it was only a TRB by default. It just managed to maintain its sideways nature and came into contact with that trend line. Yes, sir. Jets are another one. So the reason we're focusing on the monsters of tech is because these things are the market. If the monsters of tech dump, nothing else is going to work. Now, sure, for a day trade, we always focus on things like financials, airlines, um, cruise lines, casinos, energy markets, because for day trades, they're really great things to trade. $20 stock, really liquid, great options. Yeah, of course, totally. We want to trade those. If we're talking about seeing something like the S&P and the Nasdaq rally a couple hundred points, then we're going to need the monsters of tech. TRB is trend line breakover, right? So I know the R doesn't fit, right? It's TLB. but TRB. So Apple, we didn't cover Amazon. Breakover. Right? Same thing here, TRB. If you want the R, it can be resistance instead of a trend support line. TRB here, no inside day, no IX10 because we'd already dropped out of the bottom of these other two candles. But look at all of that buying pressure. Long wicks on each one of these bottoms, on each one of these lows. That by itself means nothing. It's not like we would see a little bit of that buying pressure and say, oh, I'm going to go long in Amazon. No. Right. But when we add that into the bottoming formation that we have in the S&P and the Nasdaq and all the other MOTs, and then we add that to a TRB, we got another opportunity for a trade here. And this is one of those companies, right? It's one of the monsters of tech, the MOTs. So with that in mind, same thing with Amazon. We want to see it maintain above the close from yesterday. We'd preferably want to see it rally in the pre-market higher than yesterday's highest value. And as we come into the open, we want to see it break out of this range or maintain itself above it. So if we come into the open and we're already above it and we start to fade, we want to find support there and bounce. If we're not yet above it and we come into the open, then we want to get above it, maybe get a Busby and then bounce. 2250 is the target for this first target. Should we make it through that one, then we'll focus on the high of this little range, which is like 23 and a quarter, 23.16, pretty close to that. So if you want a real near-term target, then it would be 22 flat, 22.5, 23.15. 1, 2, 3. Google, another one that is not playing with its peer group inside pattern, right? It's not an IX10 yet because it's just one day. We do have that higher wick, mostly very likely just a reciprocation by how far it fell, not necessarily indicating any kind of bullish sentiment. We're going to be looking for a breakout today, and the main thing will be getting back inside of this last candle up here. That would be 21.75 to 22.43. Now, in my longer term account, I'm still short this because this is only halfway to my target goal. But for the near term, I'll happily take a move to the upside. So that's why this bigger drawing is on there. We're just halfway home. But still, we can get those moves to the upside, right? That short term, short duration move to the upside. So that's what we're looking for. Just up to the trend line, basically 2200, maybe a little bit more than that. And it'll all be predicated on how we come into the open today, right? We got to get through the job numbers, and then we've got to get into the open and not just dump, which, speaking of, let's get this stop moved to just a little bit. Okay. So if we can't maintain that into the open and we dump, we want to focus on hitting all the tree branches on the way down. One scenario that we see a lot of times is we'll get the job numbers, we'll fade off of that high, but we won't crash and burn, right? So we won't be all the way down here. We'll be somewhere in the middle. And then we'll come into the open and we'll rally to the upside, either hitting yesterday's high or if we open above that, hitting the Globex high and then dumping like crazy. Now, remember, in a bear market, that's a normal, typical situation, right? We come into the open, we get a little bump to the upside, then we run down for the rest of the day. The next day, we rally in the pre-market, we go into the open, and then we dump and we rally the next day. Each day setting lower lows than the previous low. So it would make perfect sense that if we're going to continue this bearish move to the downside, that we'd get a bit of a rally, come into the open, test that rally's high, and then dump. But there's been a lot of flow changes in the last few days. A lot of the numbers are really indicating some positive buying pressures. We could see this trend line breakover setup today, especially with all of the monsters of tech basically lined up to do it. Just keep in mind, we're not talking about going back up to all-time highs or anything like that, right? We're talking about a few days of a sustained move in one direction and then dumping it back out again. If you notice this sustained move right here, where we had that nice little run to the upside, that was the Fed, right? They came out on 3/16. They gave us their Fed report. We ripped up until we got into a resistance zone. The next time we had the Fed, we rallied for the rest of that day and then we dumped. Only that day, right? We rallied up right into a near term resistance and then we dumped down. But it's been a consistent, persistent move to the downside. And looking at the swing highs and swing lows, we're getting a basing pattern. So we could see the start of a little bit of a move, right? Just remember, markets don't move in a straight line. So even if we are going to start moving up a little bit, maybe a day, a few days, a week, we're still only talking about 41, 42, and 4,300. Anything more than 4,300 would be a shock and a surprise, right? And it would take a lot of news to be able to do that. That's what I got for you guys. Be careful, be safe. I will be in the chat. I won't be streaming this morning, but I'll be in the chat. So if we do start to get the TRB setups, I'll be calling them out, posting my trades so you know what to get into before I actually get filled, right? If I'm not yet filled, I'm just going to put on there working orders so you know this didn't fill yet because I'm not going to just, walk on a car lot and pay whatever they ask. If it's filled, I'll post that it's filled. If it's just a working order, I'm going to post that it's a working order. The reason I'm telling you this because not all the trades need to go into the alerts channel, right? Especially like a day trade. So if I'm just day trading, they're just going to go into our main chat. If I'm going to take a swing, then it'll go over to the alerts channel. Careful out there today, guys. Be careful. Have a good one.